Nedbank offers banking solutions for individuals, small businesses and corporates. Old Mutual holds nearly 52% of Nedbank, and the company has a market cap of 94 billion rand, a price to earnings ratio of 12 and a dividend yield of 3.8%. And Mike Brown certainly has been doing a very good job at Nedbank. Of course, we do have Captains of Industry this evening at 8:30 directly after this show. And we're chatting to Mike Brown. So it is a banking-rich show tonight.
Excellent.
Just looking at Nedbank, as I said, structured stability over the last 3-year period.
Yes. Well, again, that points to the cycles. So they were, in fact, the bank that did the worst in the last big cycle. So coming out in around 2001, 2003 with the dot-com meltdown, with the collapse in valuations of some of the tech companies, Nedbank under Richard Loebsch had expanded a lot in that area. So they basically had to do a very expensive and deeply discounted rights issue in 2003. But you know, who remembers that? 2003, that's like 9 years ago, please. Since then, they've been rallying, they've been doing well, rebuilding, looking good. Tom Boardman made himself famous doing that. Mike Brown picked up from him. So now they're the sort of hot kid on the block. The issue of Old Mutual and them and what Old Mutual wants to do with them, I suppose, is another open
Well, I think now that they are the hot kid on the block, Old Mutual's quite happy to have them in the stable.
Yeah, that's how it
What
goes.
do you think, Jonathan?
Yeah, look, certainly under Mike Brown, more recently, they've been focusing on their retail bank. I mean, historically, it's been very much a corporate bank. So now focusing on their retail bank, getting that going and doing a very good job. And certainly growing their non-interest income, and that's very positive, and that really helps improve their cost-to-income ratio. And you've seen positive jaws from Nedbank, so top line growing faster than their costs.
Can their story become exciting though, Paul?
I'm not so sure that I'm seeing the changes that we're referring to here. I mean, you can see what it is that FirstRand is doing with applications on iPhones and iPads and Android as well. We can see them hollowing out their branches and turning them into a version of the Apple stores. Nedbank, all I see when I log on to that system is the same old horrible website. Maybe it's just me, I'm looking in the wrong place.
Mike assures me that they've got their apps, etc., all in order.
Because
and
banks often are an evolutionary sort of amalgam of different IT systems. And it's very difficult for them just to say, oi, we're throwing that one out and starting with a new one on Monday. It just can't be. So my understanding was that Nedbank was the sort of most held back by their legacy systems. But as you say, maybe Mike can give us something different.
Can they ever challenge for a better position in the big four?
In terms of
market cap?
Well, I mean, already they're nipping on the heels of I think their market cap's 90 billion, where Absa is 104 or something. Yeah. So they're quite close. So
they need 14 billion to close that back.
And you could see that in 12 months. I mean, Absa we know is struggling, and Nedbank's doing quite well.
Are you predicting that move?
Well,
in terms of the ranking?
I would be happy to predict it. I mean, that would be fine. I mean,
putting him on the spot, he seems happy to stand by that view.
Again, I mean, there's one issue I'd like to throw in on the table here is what about your sort of London whale type of problem? You know, the London whale was a trading book inside of JP Morgan's thing that they were totally unaware of, and suddenly they said, oops, we've got, you know, losses of, you know, $10 billion. The South African banks, I mean, we know that they're carefully monitored and all of that, but what kind of risk arises in that regard, that we could have a big trading-related write-off that happens in the core of one of the bank's proprietary operations?
It's not specifically around Nedbank. Yeah. This is a broader discussion.
We could actually. I mean, if you look at the problems we've got in the mines, I mean, the striking and all the rest, these mines are all, certainly the junior miners, are all taking quite a bit of strain. And I mean, we know that our banks have lent to those mines and have helped put in the capital.
So a corporate meltdown in the mining industry could have a knock-on effect into our banks.
We might see it.
Which is part of the risk you take. You see, banking is the quintessential picking up of pennies in front of a steamroller. You know, they make little bits of money from your bank account and little bits of money from every transaction, every fuel that gets purchased, this, that, and the other. But suddenly they lose 100 million rand on some, you know, property developer who ran away with all the money. So it's that ratio between the aggregate rewards and the big risks that are always inherent in this business model.
Jonathan, hot or not on Nedbank?
I just think it's done too much recently. I mean, you can see it's close to the 180 mark. So we did own it, but we exited at about 160, so not hot.
Paul, hot or not?
I'm being cheerful today. I like their Motor Finance Corporation business and all that, so I'm going to go with hot on this one too.